Welcome to Yahoo Finance Live. I'm Shauna Smith along with Diane King Hall. Let's get everyone up to speed with an hour to go in the trading day. You're still looking at gains across the board. The Dow up 114 points, S&P above 4,300, up just about 0.7%. The Nasdaq, the leader of the three major averages today, up just over 1%. We're seeing that reflected in the sector action. Technology by far the winner in today's trading action, followed closely by consumer discretionary. Well, investors are playing the waiting game for the Fed decision on Wednesday, but there's still more data to digest, including the latest reading on inflation. Jennifer Schomburger is here with the details on what we can expect. Jen.
Good afternoon, Shauna. Investors largely expect the Federal Reserve to hit the pause button at their policy decision on Wednesday, but tomorrow's consumer price index could prove to be a last-minute game changer for the Fed if it clocks in hotter than expected. On a core basis, which strips out that volatile food and energy prices, prices in May are expected to have climbed 5.2% year over year, compared with 5.5% the month before. On a headline basis, prices are expected to have risen 4.1% versus 4.9% in the prior month. If CPI comes in as expected, while still high and slow going, it is moving in the right direction, which could augur for a breather at this meeting. Philadelphia Fed President Patrick Harker said on May 31st that the Fed is seeing signs inflation is moving in the right direction, but that it's stubborn. He said it will take time, but we, quote, can't slam on the brakes really hard. He thought skipping a month to assess made sense at the time, though he reserved judgment for the May jobs report, which came in stronger than expected, and CPI due out tomorrow. Now, some economists are pointing to a particular producer price index, the so-called PPI, Personal Consumption Services Index, which looks at the cost of non-shelter firms to deliver services. That measure shows inflation has quickly dropped from over 8% in March 2022 to the most recent reading of 3.2% in April. On a three-month average, it is actually sub 2%. Now, the key is if the Fed does pause at its June meeting, does that mean it is finished with its interest rate hikes? Well, Fed Governor Philip Jefferson perhaps put it best in his last speech on May 31st when he said, quote, "A decision to hold our policy rate constant at a coming meeting should not be interpreted to mean that we have reached the peak rate for this cycle." We will get new interest rate projections on Wednesday. Back to you.
All right, Jen, the markets and investors really looking forward ahead to what we hear from Powell and team on Wednesday. Thanks.
Indeed. Well, a big week on tap for investors as the Federal Reserve will meet on Wednesday to decide whether to raise interest rates again or pause. For more on what to expect, let's welcome in Hugh Roberts, Quant Insight Head of Analytics. So, Hugh, let's get right into this and talk about the Fed and expectations. I see you're gearing up. Thank you so much for joining us.
Warming up for the interview ahead.
I see. We love it. All right. So take us into your expectations, first off, for the Fed this week.
Well, I think actually the key point was made just there. The statement of economic projections could arguably be critical. In a very mechanical way, growth and inflation numbers have come in stronger than expected. So that should really mean that the SEP results in higher growth numbers, higher inflation projections. So that would in turn suggest that maybe that the Fed have to revise the dot plot higher as well. And that would also speak to the last point that was just made there, that how does the market get convinced that a pause does not equal a dovish pivot? Well, one way to do that would be via the dot plot and moving those plots higher.
Hugh, from your estimate, how much progress has the Fed made on inflation? And I guess how many more hikes, it's all speculative at this point, do you think might be necessary in order to get a better handle, a better grip on some of those inflationary pressures that have proven to be much stickier than I think most had anticipated?
Yeah, I think that the stickiness is the problem. I mean, we're actually in the sweet spot now, the next couple of months, where base effects are really going to kick in. And all being well, headline inflation could fall from almost 5% down to close to 4% tomorrow, all being well. And then the July report, you could see it fall down to the low threes. So, you're getting within 100 bips or so of the 2% target. But that's the headline number. The problem, as the Fed have told us, is the stickiness of core inflation, and that's really the issue. From our perspective, Quant Insight, we don't really do forecasting in that sense. We don't have a view on 2023 growth or where the CPI will be come December. What we do is measure the overall macro environment and then look at how markets are trading with it. And actually, from our perspective, the inflation debate is clearly critical, but actually what's key right now is interest rate volatility. So really, as much as tomorrow's CPI number is important, it's stuff like the deluge of Treasury supply that's coming up as they replenish the TGA, and it's supply dynamics that will impact bond yields. They're really the things we're watching much more than CPI, truth be told.
And speaking of kind of expectations for how this all plays into market action. So, of course, we know the Fed's decision plays a major role in the markets, and Goldman Sachs is optimistic. Different than some notes that we're hearing earlier today, the bank lifted its year-end target for the S&P 500 to 4,500. Now, we saw it top 4,300 today, arguing the S&P 500 could keep climbing as other sectors start to catch up with tech's just stellar performance. So what is your thought on that projection?
Somewhere between Goldman and Morgan Stanley. I don't like being a fence sitter, but you've obviously got the two bookends, Goldman revising things higher, Morgan Stanley sticking very much to the bear case. Just to reiterate that last answer, what we do is we measure, given where US growth is, where US inflation is, what the dollar's doing, what US credit spreads are doing and commodities. We then come up with, we look at the individual pattern of association between all those macro factors and say the S&P or the Nasdaq, and that gives us a macro warranted fair value. Now, macro warranted fair value for SPOOs at the moment is around just shy of 4,200. So we have the S&P as a little bit rich. The Nasdaq is even richer. It screens us about 4.5% above where we deem macro warranted fair value to be. So from a pure valuation perspective, we're nervous. But the trouble is, from our perspective, is that macro model value is still trending higher and has been trending higher for a month plus now. So you're not going to short an asset when macro is saying that conditions are improving. So sadly, at the moment, we're kind of we are fence sitting. We're watching valuations that don't want us to chase the market here, but macro conditions are still pointing north for the time being.
Hugh, what are you waiting for to get you off the sidelines there, just in terms of some of those overvaluations that you were just talking about? What levels do we need to see in order for you to be maybe jump right in?
Well, our back tests show that when the S&P gets to more than one standard deviation rich versus our model, that historically has been a good sell signal. At the moment, we're at 0.6 of the standard deviation, so we're not quite there yet. And then in terms of the factors to watch, it is the rate space, but too many people just look at the level of 10-year yields. And on our modeling, that's not correct. You want to be looking at rate vol. So you want to be looking at the slope of the yield curve. They're both the most important drivers for the US equity markets at the moment. So that's why I made the point earlier about any disorderly price action in the US bond market, and the obvious catalyst for that would be increased supply. As post-debt ceiling, we start to replenish the TGA, the Treasury General Account. That's the kind of thing we're watching really, really closely.
And Hugh, to your point, just, we have these divergent viewpoints between Morgan Stanley, Goldman Sachs, you being in the middle as a fence sitter. What does the chart tell you? Because we are starting to see some inflows, not just, say, the S&P 500, we're starting to see more inflows in small caps, et cetera. What is the market signaling to you right now? I know you've talked to us previously about seeing a recession, but what does the data tell you now?
Yeah, the survey evidence, like all these things, can be in the eye of the beholder. You can see some of the shorter term measures suggest that we're now beginning to look a bit overbought, and some greed is kind of seeping into some of these sentiment indices. If you look at some of the more slower moving kind of custodian surveys that kind of speak to where mutual funds are positioned, then people are still very much underweight. So it kind of depends which segment of the market you're looking at. If I had to get off the fence, I don't want to be called a fence sitter, I would say the price action screams melt up to my mind. It does look like a lot of people who have been underinvested and underperformed year to date must be getting very nervous as we come into the end of June, the end of Q2, halfway through the financial year. You've been short, and you've been watching this AI narrative for 3 months now, and you haven't been invested. I would have thought that's got to cause a lot of shorts to be quite nervous. And that, to my mind, is probably the path of most pain.
Hugh, what are you seeing from your screeners? What's the cheapest on macro valuation terms to you at this point?
Yeah, it's interesting. So we thought it might be financials, but actually financials are in line with macro conditions. The ones that actually stand out from our perspective are the ones you'd expect, cyclical and value plays, like materials, like energy, but also some of the bio and pharma kind of more traditional kind of healthcare stuff. So it has got a cyclical value defensive bias, which probably won't surprise a lot of people. But it's those rather than financials. We're not getting a green light on financials yet on our modeling.
And Hugh, one more quick question. What's the risk? You talked about you don't want to be a fence sitter. And what's the risk in not getting in front of, say, the Fed's next move if they proceed with what the market is generally expecting and what they've telegraphed, a pause? What's the risk of, just continuing to sit on the sidelines?
Yeah, there's always that risk. It's a very fair question. The opportunity cost, as I say, if I go back to my answer to the last question, if we continue to kind of squeeze higher, then yeah, there will be opportunity cost at stake. So, maybe some hedges that, do give you some kind of upside exposure would make sense from a tactical perspective. It's just that so much of the good news is in the price on our modeling that it's really difficult for us to chase.
All right, we will have to leave it there. Hugh Roberts, Quant Insight, Head of Analytics, thank you so much for joining us today.
The S&P 500 is on track to close at the highest level that we've seen in just over a year. Jared Blickery is here with a closer look at some of the stocks that are marking their own milestones. Jared.
Hello. Well, not surprisingly, Tesla is at the top of that list, up 12 days in a row. As a mega cap, we've been talking about its outperformance for most of the year, but there are some other joiners in here that we haven't talked about in a while. Delta Airlines up 12 days in a row, matching Tesla. Roku up 11%. And as you see on your screen, I've compiled a list of the top 20 performers in the year-to-date in the S&P 500. And at the very top, we're going to see NVIDIA. That's up about 160%. Then we got Meta, Tesla, AMD. But now we're going to see some names we haven't been talking about, maybe today, like Royal Caribbean. That's up about 80% or though. Carnival Cruise Lines also up about 80%. GE, when's the last time I talked about GE? Well, it's been a while, but a lot of these names coming to the forefront, really surging recently. And so this rally, what it's telling me, it's not all about AI anymore. We're getting some more entrants into the field. However, is this part of a normal rotation that we're seeing in a healthy bull market? Or is this just suckering in people only to go down again? I think rotation is good. It's not the most productive to have a very crowded field like we've been having. And let's be real, a lot is going to change potentially tomorrow with the CPI numbers, with that big Fed decision we're getting the next day. So I'm going to be closely watching this list. A couple of other names in there, a trucking name, Packer, I believe, is in there, and also some others in the transport field. So really good to see not only the companies that typically do well in low interest rate environments when we don't see the economy humming along, but also some companies that do depend on the economy. So with that broad mix, I have higher hopes for this bull market than this bullish rally than I did maybe 2 weeks ago. But again, a lot more event risk potentially coming down the pike in the next 2 days.
Indeed, that melt up seeming to continue. Thanks so much, Professor Jared, as I like to call you. We're just getting started here on Yahoo Finance Live. Coming up, former President Donald Trump has arrived in Miami ahead of his arraignment tomorrow. We'll break down what to expect on the other side of the break. Plus, Microsoft's planned acquisition of Activision Blizzard is facing another potential roadblock. More details on that later in the hour. And shares of cruise liners are sailing into the green this afternoon on the waves of a few upgrades. All that and more when Yahoo Finance returns.
Former President Donald Trump landed in Miami earlier this afternoon. He's set to face criminal charges of unlawfully keeping U.S. national security documents, as well as lying to officials who tried to recover them. Here for more on that and also what to expect next, we want to bring in Nick Ackerman, former assistant U.S. attorney of the Southern District of New York, as well as a former Watergate prosecutor. Nick, it's good to see you. Certainly, many people obviously have not been holding back. We heard from former AG Bill Barr over the weekend. He called this indictment very, very damning. I'm curious, just from your perspective, how serious this case is and how strong some of these allegations are that are outlined in this indictment.
Well, one, it's very serious, and two, the case appears to be very strong based on the evidence that's outlined in this indictment. And the indictment basically takes Donald Trump through the theft of the classified information from the White House that he kept unlawfully at Mar-a-Lago, that he used in a way that is not even permitted. They've got him on tape using one of the documents to go after General Milley, the chairman of the Joint Chiefs of Staff, and acknowledging on that tape that he had no ability to declassify that document, that it was still secret, and basically obliterating all the defenses that his attorneys have made over the course of the last couple of months, including defenses that he's made as well. And then you take into account the fact that he essentially hid 30 boxes of documents from his own attorney, who was charged with the duty of going through the documents to respond to a grand jury subpoena. And Trump was assisted in this whole project by his assistant, Mr. Nauta, who's also charged as a defendant here. This lays out evidence that is extremely serious and shows that Donald Trump had a total disregard for protecting classified information, keeping it in his bathroom, his shower, putting it in the ballroom at Mar-a-Lago. There's basically nothing good that comes out of all of this. And it seems like a case that's pretty straightforward. The star witness is going to be Donald Trump because they've got him on tape. They've got lots of witnesses who are going to testify as to what Trump did. This should be a pretty open and shut case.
So, Nick, Diane here. Former President Trump has maintained his innocence throughout this. And one thing that didn't show up in terms of the indictments, there wasn't any reference to kind of any business efforts to profit from this information. Does that help in his defense in any way?
Well, let me just say, what you're talking about really is the motive. Why did he take this stuff? Why did he go to the lengths that he did to keep the government from actually getting it? So that all is motive. And motive is not an element of any of the crimes here, but it does give color to what he did and to the seriousness of what he did. We do have some hints at that, where he basically was using it against General Milley to make a political point, basically Trump's idea that he's his own retribution going after General Milley. But we also know that the prosecutors were looking at other angles. They subpoenaed records from the Trump Organization on 7 foreign countries that most likely relate to some of those classified documents. And it's very possible that this kind of information and evidence is going to come out at the trial, simply because there's really not a necessity to put this into the indictment. So we don't really know exactly what this proof is going to be. And I'm sure when the trial comes along, we're going to see some surprises.
Nick, there's still a search underway for an expanded legal team. Give us a sense just of what that process is like, what the timing of that is like, and how that could potentially impact the timeline of this case, if at all.
Well, it's going to have to be pretty quick. If Trump got rid of 2 lawyers and now he's got to get other lawyers that are going to represent him in Florida, if I were the judge, I would just make sure this is done post haste. If I were the prosecutor, I'd be trying to get this to trial in a couple of months, basically providing all the discovery as quickly as possible, trying to get the judge to set down a very short motion schedule and get this to trial. I mean, this is a simple case. Most of the evidence Trump is already aware of. And so there shouldn't be a lot of dragging the feet here. This should get to trial immediately.
So, Nick, I got to ask you, in terms of, it does seem like the evidence is pretty strong. And if this does go, not the way that President Trump would like it to go, I mean, he is still running for office again. What is the fallout from this? I mean, he can still proceed with that, correct?
Oh, sure. I mean, there's nothing in the Constitution that says you can't elect somebody who's in prison. The only qualifications are you've got to be 35 years old and born in the United States. But I find it hard to believe that he's going to last long in this race. We now have 2 indictments. We know that in late July, early August, when Fani Willis in Fulton County brings together the next grand jury that's going to indict on her case, that's going to be a blockbuster indictment that's going to charge Donald Trump and a number of other people with respect to interference in the presidential election in Georgia. And it's also likely there's going to be a 4th shoe to drop with Jack Smith with the January 6th matter that he is also investigating. At the end of the day, it's very hard to believe that the Republican Party, senators and members of the House are going to want to run for re-election in 2024 with the head of the ticket under indictment in 4 different cases. All of these cases laid out in detail in the indictments that just are not resume builders for Donald Trump. It's not going to appeal to the independents that a Republican nominee has to win over in order to take the White House.
Nick, the judge that was appointed to this case, at least for now, Eileen Cannon, appointed by Trump. There's also some attention that has been drawn to a recent ruling that she made pertaining to Trump. What kind of challenges from a former prosecutor standpoint, does this potentially pose here to the prosecution team?
I don't really think it's a big issue. Look, she made a mistake. She screwed up in terms of ordering a special master, which she shouldn't have done. She was looking at what happened in 2 other cases in New York with 2 of Trump's lawyers, Rudy Giuliani and Michael Cohen, where the judges had ordered that there be a special master. But in both of those cases, there was a good reason to do it because there was lots of potential privileged communications because both of those individuals are lawyers. Look, judges make mistakes. She was reversed by the 11th Circuit. They made it very clear to her that Donald Trump is not to be considered in any kind of special status because he's a former president, that he's to be treated just as any other criminal defendant in the federal court system is treated. And I think that she's learned her lesson. I mean, at the end of the day, and let me just say this, I mean, a lot of the judges that Donald Trump appointed, I mean, none of them have really provided him what he wanted, including the U.S. Supreme Court that didn't uphold any of his cases based on the big lie that the election was stolen and rigged. All of those cases were dismissed, a lot of them by Republican judges. And if you go back to Watergate, the same thing happened. The judge who was in charge of the Watergate case, Judge Sirica, was a Republican appointee. He's the one that essentially set up a situation that caused the Watergate burglars to come clean and cooperate against higher-ups in the White House. And the Supreme Court, many of whom were appointed by Richard Nixon, wound up deciding unanimously to order Nixon to turn over the Oval Office tapes. Bottom line, at the end of the day, I think it's better for our system, better for the judiciary, that Donald Trump be tried in front of a judge that he appointed, that he be convicted, and that people realize that this is a serious case with serious consequences, and it has no politics in it whatsoever.
Trump set to appear in federal court tomorrow, Tuesday, in Miami. Nick Ackerman, great to have you. Thanks.
All right.
Thank you.
All right. Succession, I should say, is at hand in the Soros family. According to the Wall Street Journal, George Soros is handing over the reins of his $25 billion empire to his 37-year-old son, Alexander Soros. Alex says he's even more political than his father. Joining us now with more is Yahoo Finance's Rick Newman. So, Rick, what is the big picture here?
George Soros is a gigantic heavyweight Democratic donor. He's 92 years old, so people may feel like he's faded from the scene. I looked up his recent donations. He has not faded from the scene at all. During the last election cycle, 2021 and 22, he donated $175 million. That basically went into his own super PAC, and then the super PAC distributes the money to almost entirely Democratic politicians or the campaigns on behalf of those politicians. So he's a huge figure in Democratic politics. Conservatives, of course, vilify him all the time, but they probably do that for good reason because he backs tons of Democratic campaigns and has a pretty good success record over the years.
So, Rick, now that Alex Soros is in charge, is at the helm, what does it mean just in terms of the causes that he says he is going to support? Because two of the things that he outlined in this journal was he was going to focus on voting rights and abortion rights.
Just break down the George Soros empire, if you will. So there are many components to this. One of them is his investing fund, and then there's the Open Source Foundation, which is basically a nonprofit and a humanitarian organization. Then there is the super PAC called Democratic PAC, and I think he's a Democracy PAC. Sorry, and I think the one operating now is called Democracy PAC 2. So there's a lot of different stuff in there, and there are many people involved in all of these things. The one we're really focusing on politically is that super PAC. And Alex Soros says he's a little more political than his father. Who knows what that means? He did use one example. He says he's been a big fan of Bill Maher since he's been in college. Alex, by the way, only 37 years old, kind of like one of those kids on Succession, which we were talking so much about during the last couple of weeks. Made me think I can't figure out if he's Kendall Roy or Roman Roy, but he has the lifestyle. Sure. But he made a distinction saying he doesn't care so much about policing speech on campus. Maybe he is a little more freewheeling than some of the super liberal Democrats, but I'm not sure that's going to make a difference in where these campaign dollars go because he's going to be backing Democrats across the board. And he said one of the biggest one of his biggest priorities is making sure Donald Trump, who we were just talking about with Nick Ackerman, does not get elected in 2024. So the Soros money is going to stay in the game.
We'll see what Alex does with it. All right, Rick Newman, great to have you. Thanks so much for joining.
Bye, guys.
Coming up, we kick off our week-long series, Real Estate, the New Reality, as we dive into the hurdles surrounding the housing market. We'll get a good look at some of the local markets across the country next.
Federal prosecutors unsealing an indictment outlining 37 charges against former President Donald Trump for mishandling classified documents after leaving office and then blocking the government's attempts to try to recover those documents.
I'm more interested in the political ramifications of this. And it seems to me that any Republican who veers into thinking that this is a serious issue that compromises national security is not going to fare very well among other Republicans. And I think that's one of the more interesting aspects of this case. The politics of it are going to be just stupendous to watch.
Somewhat amazingly, this does not really hurt Trump among Republican voters. He retains a sizable lead in the polls, and in some ways, this seems to benefit him among his supporters. He may end up convicted of crimes by the time the election is actually held in November of 2024. How do we spin this forward for the market? This is probably a reasonably good outlook for markets. If it's Biden, markets are good. And if it's another Republican, Republicans generally are friendly toward markets and toward businesses. So I think that's pretty good too.
If the stock market is right, we've really still got a stock market rallying by the end of next year, and inflation has come down immediately to 2% by that point, and there isn't terrible unemployment. Whether he's indicted or not isn't going to make much difference.
We're getting the pulse on the housing market this week during our week-long series, Real Estate, the New Reality. They say home is where the heart is, but for those looking to find a home in the U.S., well, that path to ownership may be pretty tough to navigate. New U.S. listings falling 25% from a year ago. And with buyers facing higher rates, the state of the housing market is anything but simple. So here to give us a better sense of what is playing out across the country, we're taking a look at Tampa, Florida with Smith & Associates real estate realtor Melanie Atkinson, a look at Indianapolis with True Blood real estate realtor Dan O'Brien, and Denver, Colorado with Kathy Casey, Coldwell Banker residential brokerage realtor. Great to have all three of you all in different parts of the country. I want to go around the horn real quick just to give us a better sense of exactly what you're seeing. So let's start east. We'll work our way west. Melanie, I want to start with you. What are you seeing right now in Tampa?
Sure. That statistic that you just put up is exactly what we're seeing in Tampa as well. We've seen a slowdown in market activity in general with buyers. But we've also seen most sellers don't want to sell their house. So buyers out there just don't have much to choose from. So the supply has not increased much, which means the prices haven't dropped too much.
And then I want to jump in here and bring the rest of you all in here and see what the trends that you're seeing in the rest of your regions. Let's go out west for this one. Kathy?
Hi. So, yeah, I would like to echo that. Our market has definitely slowed down. We were at such a hot fever pitch last year, and as everybody knows, the fever is not good. So I just feel like we're slow and steady now. I feel like we have a more stable market, more sustainable market. I actually think it's better for buyers than it was last year, even though the interest rates are higher, because number one, you're not paying over asking. We're getting some seller concessions. And, interest rates are high, but, there's workarounds on that as well.
Dan, what are you seeing in the Midwest?
Very similar. It's still a seller's market. It's still a competitive market, but it is certainly a different ball game than it was 12 to 18 months ago. It's been quite the ride as we were seeing those skyrocketing rates last year and a lot of uncertainty of what was going to happen. Are we going to see 10% interest rates? But now, interest rates have somewhat semi-normalized, where now buyers are looking in that 6.5, upper 6 range, where they've kind of accepted, unfortunately, this is the new norm, but the expectation is that rates are going to hopefully come back down in the next 12 months and they can ultimately refinance. So there was a lot of uncertainty. The second half of last year definitely slowed down. We didn't see any kind of big dip or anything like that, but we certainly saw a plateau and a reduction of buyer activity. But so far, the spring and summer market has picked back up. We're starting to see some more historical trends as things have happened pre-COVID crazy market.
Dan, what about that buyer activity? Are buyers being more pickier in this environment?
Absolutely. They actually have a chance to think about buying a house before they have to jump in against 40 other offers. So like she was saying, it's ultimately a healthier market. Of course, now sellers are saying, well, wait a second, where are all these offers and where's the waived inspections and waived appraisals? But at the end of the day, it is a much healthier market. Things are slower. Average days on market here are actually close to 80 days, which is a very high number compared to the last several years, but I've been in the business almost a decade, and certainly that's not an uncommon number. So buyers are a little bit choosier, a little bit pickier. They have some time really thinking about, okay, if this is a big investment, interest rates are higher compared to what they were. Is this really what I want? So at the end of the day, I think it's in a good spot.
And I want to quickly get to you, Melanie and Kathy. In your regions, is it a buyer's or a seller's market or none of the above?
I would say in Tampa, it's none of the above. So in Tampa, what we're seeing is we still only have about 2 months of inventory. And one of our biggest problems is quality of inventory. So if you have a house that goes on the market in Tampa that's really well prepared, then that house typically will have a lot of offers, maybe not as much as we did last year. You might have went from 10 offers to 2 offers, but we're still seeing multiple offer situations here in the Tampa Bay area. Florida is still really a desirable place for people to relocate to. We are just seeing houses stay on the market longer, but those houses that are staying on the market tend to be the ones that are in worse condition and need a lot of help and construction, and buyers just don't want to deal with that on top of having to pay, historically high prices and higher interest rates.
Kathy?
So, yeah, despite what you see on TV shows, it's not all designer clothes, glamour shots, and fancy cars that's happening in our market right now. So basically, so our average days on market is about 34 days. So it still is a seller's market in our region. At that 34 days, it wouldn't hit to a buyer's market until we're over 90 days. So we are still in the seller's market, but it actually is working well for both buyers and sellers because, as you previously mentioned, buyers do have a chance to actually look and they don't have to make a decision in 10 minutes for the house that they want to buy. Another thing that I have noted, and this was put out by NAR, that 65% of those that purchased during the pandemic have some sort of buyer's remorse. And I think that is because they had to make their decisions so quickly. And, they really wish they would have gotten, the third bathroom or the fourth bedroom or in a better neighborhood. And so for those buyers, some of them feel like they are stuck because of the interest rates they got. But there are definitely ways that we can work around that. I'm starting to see a trend in lenders offering permanent interest buy downs. So instead of just the 2-1 buy down, we're starting to see a trend in permanent buy downs. Just last couple of weeks ago, I had a buyer that had a builder that actually brought her rate down 2 interest points. So it was 6.5 and it was brought down to 4.5%. And so because these are permanent buy downs, this really allows them to qualify for more house. So, like I said, there's ways around trying to get around the interest rates and what's happening in the market, but I definitely feel it's kind of even kill for both buyer and seller, but still leaning more towards the seller's favor.
Dan, for those who are looking to buy in the Indianapolis area, what do they need to know? What's the 1, 2, 3 tips that you would share with them?
Again, it's always about being prepared. If you're a buyer and you're coming in there not having spoken to a mortgage lender about getting pre-approved, if you don't know what you really want, at the end of the day, you're going to waste your time, right? So it's always one of those as a buyer, have your stuff in order, talk to a mortgage lender, talk with a professional realtor, figure out what you're looking for. Because, I said that days on market are up. However, there are still zones that are very competitive. Hamilton County is on the north of the Indianapolis area, and it's, kind of the affluent suburb. And we are absolutely still looking at multiple offer scenarios. And, an interesting statistic here is that in Hamilton County, there have been more sales over $1 million than under $200,000, right? So in this market for Denver, that might seem crazy that we can even think of under $200,000. But here, the average price point, the median sales price in greater Indianapolis is $280,000. So, we have some areas that are still selling very quickly. Even the high-end homes, at least what we would consider high-end for this market, are selling in a short period of time. So again, to the comments of the nicer homes, still, very, very quick at selling. But if you're a buyer, make sure that you know kind of what you're doing. If you get in there, you may or may not have time to get a pre-approval letter, depending on what the house is doing, if there are multiple offers. So that's the biggest thing that I can recommend, is talk to a professional, both a mortgage lender and a realtor, to kind of understand what you're looking at.
200,000, Dan, that would get you a shoebox here in New York. Melanie, I want to quickly get back to Florida because I was recently down there, not in your region, but in Miami. I noticed the heat down there. What are you seeing in terms of the cash spend? So we saw some data from Redfin showing about a third of home buyers are paying cash. Are you seeing that play out in what the data is showing you down there in Florida?
Not as much as it was before. So keep in mind that over the past couple of years, a lot of the cash buyers were actually corporate companies that were coming in and purchasing houses with cash with the purpose of then using them as rentals. We also had people from all over the country buying second homes here. They were selling houses up north. Coming down with a lot of cash because the prices were up all over the country. So people had all of this cash to spend. So either they were coming down here for primary homes or secondary ones. But for the most part, in general, because the market activity has slowed, obviously the cash activity has slowed. And more significantly, we don't see those corporate buyers out there quite as much, which is great for the lower end price points and first-time home buyers if they're not competing against corporate buyers.
All right, we will have to put a pin in our conversation. Love hearing about the state of real estate across the country. We're represented here by the Northeast at our table. Anecdotally speaking, our thanks to all of you, Kathy Casey, Melanie Atkinson, and Dan O'Brien.
Thank you much.
The Federal Trade Commission reportedly planning a new action to block the Microsoft Activision Blizzard deal. Yahoo Finance tech editor Dan Howley here with the details. Dan, just another regulatory hurdle, it looks like, for this deal, if it's ever going to get done.
Yeah, this is kind of the 1-2 punch are the US and the UK. Mm-hmm. And so this would be a federal lawsuit. And the idea here is, yes, the FTC is already suing Microsoft to block the deal. This is to prevent them from going ahead and completing it while the FTC's own court deals with the initial suit. So it's secondary, but it's just really to stop them from being able to go ahead and completing the purchase anyway. Over in the UK, we have the Competition and Markets Authority. They're also trying to stop the deal. Microsoft is appealing it there to try to move it through. But this is really kind of the two hurdles that the company has to overcome to be able to put this deal together. Some of the experts that I've spoken to in the past have said, look, if the UK can't get done, the UK can't get done. They will just work around that. They'll continue to operate as separate entities there, and that's it. The US needs to get done. It's such a massive market for gaming that if they left that out, it would be absurd. So right. the FTC issue, I think, is really the main one. And we'll have to find out later this year if Microsoft can beat this or if they can win this appeal. And I mean, right now it's difficult to say one way or the other.
Right. Yeah. I mean, these tech heavyweights continue to face this scrutiny. I mean, Microsoft not the only one facing these kind of antitrust headwinds. You also have Google in the crosshairs, reportedly considering a new complaint, European regulators, against Google's advertising technology. What can you tell us about that?
Yeah, so this is just another kind of issue that Google Alphabet is facing in the EU. The European Commission apparently as early as Wednesday going to file some kind of antitrust argument against Google and Alphabet. That would be kind of the latest in a long series of actions that the European Commission has taken against Alphabet over the years, resulting in billions of dollars in fines. So we'll just have to see what this issue is. It has to do, apparently, according to this report by Bloomberg, with the ad business. I mean, it's so massive for them. It could be any number of things, but that's their bread and butter. That drives, I think it's 80% of their overall revenue. So any hit there is a gut punch for them for sure.
Well, we'll certainly keep watching that. All of them continuing landing in the crosshairs of European regulators. Dan Howley, thank you so much. Coming up, goodbye or goodbye. We dive into a few trending tickers to watch and a few to avoid. Stay with us.
A bullish call from Goldman Sachs, the bank boosting its year-end target for the S&P. And while much of the rally this year has been thanks to the excitement that we've seen around AI, chip stocks like NVIDIA surging since January. But is it too late to invest in the AI boom? We want to bring in our next guest who still says there's money to be made, opportunity outside the so-called Magnificent Seven that's been getting a lot of attention. Here with some of his top picks, we want to bring in Dryden Pence, Chief Investment Officer of Pence Capital Management. Dryden, it's great to see you here. So investors looking for AI plays, I know that you prefer to play it through supply chain for AI. Why is that the right way to go about this?
Well, thank you for having me on. The point of the matter is you have some of these stocks have really gone up a lot, but the key things within those stocks, within those companies, in the supply chain are provided from some others that haven't had this massive ascendancy. So when you look at, say, NVIDIA, you recognize that companies like Taiwan Semi and ASML are absolutely essential to what NVIDIA and AMD do, but they haven't run up quite so much. And so there's more room there, and they're absolutely essential to that supply chain.
And Dryden, Diane here. I want to ask, let's play the flip side of this. Where should investors be trimming positions?
Well, you know, this is when you think of AI, you also tend to think of Intel, which was dominant for years and years and years. And the issue is they really kind of lost their dominance. They've dropped from about 80% of the market down to 62. They're no longer the leading innovator in that space. So you have many other companies kind of overwhelming or ascending far faster than Intel will. So I think we would avoid that in favor of the stocks I mentioned earlier.
When it comes to some of the opportunity inside of technology, so you're avoiding Intel, you like Taiwan Semiconductors, you like ASML. When investors are trying to pick out the winners and losers going off of this AI theme. What is the biggest red flag that you see? Is it just all based on valuation and some of that hype, all of that just already priced in to some of these larger names?
Well, there's really two things to look at. The amount of hype that's placed into these names, so they tend to get ahead of themselves dramatically. And anything that has a drawback or a pullback, the high flyers sometimes get punished, particularly if we look at different moves on inflation coming up or interest rates or Fed activity. But the companies that are absolutely essential to this, when we talk about, again, Taiwan Semi and ASML, ASML, they have 100% monopoly on extreme ultraviolet light lithography machines, which are absolutely essential to any of the high-tech machines going forward. So they've got to be part of everything that happens in the future if you're thinking about AI.
Dryden, I want to ask you about, Shauna brought us into this talking about that Goldman note, expecting the S&P 500 to hit 4,500, so boosting their target. And of course, you have some naysayers. Morgan Stanley has a different view. What did you think about this Goldman call? Is this bull run going to keep running?
Well, I think what you've had is a bifurcated bull run. You had like 7 stocks leading everything, and it's only now that we're beginning to see everybody realizing there probably isn't going to be a recession, and that we're actually going to, the market was pricing in a recession this year, and that's just something that's not going to happen. The market's going to be disappointed by that. So what's going to happen is you see this broader expansion of the rest of the market as people understand that recession's probably not going to happen. And so I think that Goldman's probably making an appropriate call here, and we see that happening too. But the next phase of the rally is broader going forward.
I'll talk about some of the risks that are out there in the market. Lots of focus has been on what's happening in commercial real estate, or maybe what could potentially happen in commercial real estate over the next year or two. I know one of your advising tips here to investors is to avoid Blackstone. What do you think some of the trouble in commercial real estate, what would that mean then for a name like Blackstone?
Well, Blackstone is the largest commercial real estate holder globally. I mean, and when you think of it, you've got about $1.5 trillion worth of mortgages coming due in the next 3 years, and we're in a completely different interest rate environment now. So you have companies that had mortgages, their profits were built, their performers were built around much lower interest rates than the new market. So you're going to have trouble refinancing these properties. We see commercial properties running into problems, and therefore that's why we think Blackstone is something to avoid, because of their heavy exposure there. Just you're going to have a refinance problem in commercial real estate over the next 3 or 4 years, and it's going to be difficult for some of these companies. And I think that creates some weakness, and interest rates are not going to turn around and go down back to 2% anytime soon. So the pro formas are different, the debt service coverage different, the qualifications are going to be different, and we see a little cloud for commercial real estate over the next couple of years, and think that someone overly exposed to that, such as Blackstone, should be avoided.
Let's get back to the optimistic side of the picture, Dryden. You expect this rally to become more broad-based. Outside of AI, tech, kind of semiconductor winners here, are there any other winners, specifically any specific stocks or sectors that you're looking to just increase momentum?
I think when you think of sectors, you look at, and if you take a look at the consumer, you really have two sides. We barbell the consumer. You have the high-end luxury part of it, tends to work very well. And then you also have this trade down that's occurred due to inflation at the low end. So you kind of can split that up with like an LVMH and a Walmart, barbelling those. But the other thing that we think is really important is, consumer staples and cyclicals, as these companies have been kind of held down in this anticipation of a recession. Now that that's coming probably off the table, or less of one that people were thinking, I think you're going to see those sectors, expand and catch a bid moving forward here. So we see a general positive improvement, both in discretionary and sectors, and we still like defense a lot.
Your two picks, Taiwan Semiconductor, ASML, what you're avoiding, Intel and Blackstone. All right, Dryden Pence of Pence Capital Management. Thanks for joining.
Thank you.
Well, coming up, we get you set for the closing bell on Wall Street. Once again, gains across the board, much of that strength in the Nasdaq. You'll get the Nasdaq on track to close up nearly 1.5%. We'll be right back. And that's the closing bell on Wall Street. Once again, all three of the major averages starting off the week in the green, closing to the upside. Some of the strength there in the Dow, S&P, and Nasdaq. You're looking at the Dow closing up just shy of 200 points. S&P up nearly 1%. The Nasdaq, the winner of today's action, up another 1.5%. We take a look at the sector action this afternoon. Consumer discretionary technology by far the outperformers. And you also have communication services, industrials, healthcare among those trading to the upside. All right, let's take a look at some of those individual movers. First up, Illumina shares gaining today, closing up just shy of 4%. The company announcing that its CEO will be stepping down. This coming after a lengthy proxy battle with activist investor Carl Icahn. Now, Illumina saying that they will, quote, continue to execute on the company's goals while searching for a new CEO. And Diane, the street was pretty upbeat just about this announcement that was made. A new person potentially in charge here. Once they do name that permanent CEO, the street looking at that as a positive here for the company.
They are looking at it as a positive. We know this has been in play for months. Carl Icahn kind of pushing for this change. Interestingly enough, he's going to stay on as an advisor through July. So I found that interesting. And he put out a note on LinkedIn over the weekend. So, kind of making it seem like it was his choice, but we know this has been pushed for a while, and again, being received well on Wall Street. Meantime, we've got some deal news we're watching today hitting the Nasdaq. That stock down more than 11% on news that it will be acquiring Adenza, a financial software company, for $10.5 billion. It's a combined cash and stock deal. Now, Adenza makes software for big banks and brokerages in areas of risk management, trading, trade processing. Now, the deal for the Nasdaq is the biggest in its history. Comes as the Nasdaq tries to carve out an even stronger tech footprint. But not surprising to see shares of Nasdaq getting hit today, because typically you see that in acquisition.
Yeah, and I think this move here from Nasdaq, not necessarily a surprise. We've heard from CEO Dina Friedman over the last several years saying that the company is looking to diversify its business, not be so reliant on their exchange business. So this is just another avenue just in terms of diversifying their revenue streams. When it comes to what exactly this could do for the company as it stands right now, so the software business accounts for more than a third of Nasdaq's annualized recurring revenue. So they're looking to build on that trend here going forward. Let's also take a look at Tesla, because good news here, it keeps rolling in for the company. Shares closing up for the 12th day in a row. Now that marks its longest winning streak on record. Tesla here even getting some more positive headlines coming in today's action. EV charging companies ChargePoint and Blink also saying that they will have chargers that are capable of working with Tesla's network and really just solidifying their position right now as a dominant player in the EV space, but more so their charging capabilities really coming out on top when it comes to EV charging wars.
Right, to your point, and coming together as really a single charging point, because of course it follows that the GM, the Ford relationship, those announcements. And this is also not just for shares of Tesla. You saw a Blink ChargePoint climb with regard to this move, them pairing up with Tesla. And I mean, just Elon Musk is still continuing to respond to naysayers, right? When you think about these kind of deals that are happening within this space and being really that main point of charging connectivity for the EV space.
Yes, certainly. And we're seeing some of those gains today, closing up another 2%. All right, let's get a look at another big mover in today's action, and that's cruise lines. Some bullish calls out on the street, really spreading that optimism just in terms of the demand story for some of these stocks. Here to discuss, we have Yahoo Finance's Josh Schaefer. And Josh, it was almost across the board here just in terms of some of the strength that we're seeing.
Yeah, so you saw upgrades from JP Morgan and Bank of America today coming out and upgrading. That was Carnival Cruise Lines that they upgraded. That stock closed up nearly 13%. And part of the strength they're seeing is just overall demand in cruise lines. Bank of America writing that the cruise recovery is, quote, now stable. They also highlight overall Bank of America card spending. I thought this was an interesting point. So Bank of America obviously aggregates their own credit and debit card spending. They said that travelers spent 17.3% more money in May than they did in that same month in 2019. So people spending more money on cruises now than they were pre-pandemic. And then when you take a look at Carnival specifically and why B of A likes Carnival, they also highlighted debt. Carnival had a problem of increasing debt going back to the pandemic, but they said that now that debt is actually more under control than it was before. Our Brian Sozzi actually recently spoke to Carnival CEO Josh Weinstein. I want to play a bite for you here.
Getting back a fortress balance sheet is incredibly important to us. We peaked at $35 billion of debt. I was very, very happy to say on our last earnings call two very important things. Number one, we have no intention of issuing any more equity. And number two, we are starting to pay down the debt.
So Diane, obviously the key point that you hear there, peaked at $35 billion, right? That debt peaking, they're now coming on the other side of that. Bank of America, after talking to management last week, sees that obviously as a positive to have that debt coming down.
I'm not surprised to see that, to see the upgrades. You know, last week I spoke with Royal Caribbean CEO Jason Liberty. He talked about demand for this year and beyond. Let's quickly listen to that.
Well, really, for the past couple months and certainly right now, most of the bookings we're taking on is for 2024. So the demand trends that we've seen earlier in the year is very much flowing into 2024 and even into 2025.
Yeah, so we're seeing that play out in the numbers and Wall Street reaction to that. When I was on the ship last week, I mean, it was full. It was, you know, they said they're at 100% subscribed, over 100%. I said, how can you be over 100%? Two people to a room, basically.
It's been interesting to see that, though, also play out in these stocks to start the year, right? When you take a look at these three stocks year to date right now, you have Carnival up over 80%. You take a look at Royal Caribbean up almost 100% to start this year. So people clearly bullish on what they're seeing for bookings sort of out to end the year, right? Because that's going to come in earnings when we think about the end of 23. And then obviously, as you were just saying, 24, 25. So it seems like overall positive for the cruise line industry. I don't know if I'm going to be going on a cruise anytime soon, guys. Not exactly my thing, but someone's booking.
I know, and I've been talking to more and more people as we've just been talking about the fact that there's nothing stopping this demand for the cruise lines. We've heard from all the CEOs at this point that it's not just the people who are taking cruises before. They're able to attract new cruisers. I still, though, haven't talked to anyone that's been on a cruise. So it's time for all of us to go.
I haven't been on one, but I will say the experience of actually like being on the ship made me interested for the first time ever.
And that's pretty cool. They have everything on board those ships these days. All right, Josh Schaefer, good stuff. Thanks.
A possible sign that the IPO market might be perking back up. Kava raising its price range for its upcoming offering. Yahoo Finance's Brad Smith is here with a closer look. Brad?
Yeah, local lunch correspondent here for the day. Fast casual restaurant brand is what you got on your hands. Mediterranean based, and they're making their public debut very soon on the Nasdaq. And what's particularly interesting about this is they raised their range. Now, it's not a massive range, but what's more considerable for investors to keep in mind as this company trading under the ticker symbol CAVA when they do go public, they actually raise that range. So now the new bottom end is what was previously the top end of their range. So now they're looking at a range of about $19 to $20 per share at that offering. We will see exactly where some of that book building process moves the price to on the day of listing. They're also at this range at the midpoint looking at a valuation of about $2.17 billion here too. Some notes about the company as well that came forward within this filing. We should note driven revenue here. Their total revenue that went from $45.4 million that they saw in fiscal 2016 to get this $564.1 million in 2022. That nets out to about a 52% compound annual growth rate, CAGR, as you'll hear it tossed around on Wall Street and among the investor community here. And even when you think about where this could potentially play in people's portfolios, you look across some of the necessary purchases that people who are going back into the offices, or even if you're still working from home, that you're making on a daily basis, one of them's probably lunch.
Exactly.
Yeah.
I was going to say, so lunch is heating up. What about the rest of the IPO market? What is that? What is this signal?
It's trying to get out of the freezer right now, quite frankly. And as we think about where the activity has unfortunately drifted, I mean, last year we saw IPO activity, according to S&P Global Intelligence, global IPO activity was nearly cut in half in 2022. Only 20 launched in the U.S. during the fourth quarter of 2022. and you wonder how some of that activity is also permeated into, or the lull has permeated here into 2023. Well, according to PwC, the total funds raised globally were down from $58 billion in the same quarter, comparable quarter for 2022. They hit $26 billion in the first quarter of 2023. So that, too, a massive decline that we had seen there. And even as we had heard some of the exchanges talk about what their revenues were for ICE, that is the parent company of the New York Stock Exchange. They saw listings revenue down 2%, but the Nasdaq, they actually put some numbers on it. And in Q1, they only hit 40 IPOs. You compare that to the 70 that they saw this time last year.
Interesting. So we'll certainly see if that market kind of starts to heat up off the back of this, right?
Well, yeah, and there's a ton to take into consideration with it. Timing, when a company wants to go public. They want to go public when there's more certainty, more footing within the equity markets as well, because even in how they're able to make that entrance, make that splash, it's all about where they're going to be able to see some sustained volume as well, not just on the day of, but more long term, and what kind of market entry they're making. That certainly does get tossed onto the table and get thrown into consideration for these brands.
More than our lunch correspondent.
Yeah, I mean, look, I'm just trying to give you guys something to snack on here. I put my soul glow back in. I've been here since 6 a.m.
I love it. I love it. Brad Smith, thank you so much. All right, coming up, Oracle shares higher amid their latest earnings report. We break down the numbers. That'll be on the other side.
Let's take a look at Oracle. You're looking at shares up about 5% here in extended trading. The company just releasing its most recent earnings report, beating on both the top and bottom lines. EPS coming in at $1.67. The street was looking for $1.58. Adjusted revenue up 17% on a year-over-year basis, coming in at $13.8 billion. The estimate was for $13.72 billion. Cloud services and license support revenue, a critical part of this report, that's up 23% year-over-year to $9.37 billion. Now, the stock had closed up ahead of this report. Wolf Research did upgrade the stock heading into this earnings report. Certainly has been a winner since the start of the year, with shares up just about more than 40%. All right, let's take a look at some of the top trending stories of the day. We've got Alexandra Canal, Josh Schaefer here. As always, help us break down what is trending with all of you. First up, we got to start with the latest with Elon Musk and Twitter. And Ali, we're learning a little bit more just about what maybe his plans are going to be like for the platform.
Yeah, it seems like Musk wants to balance some of those more conservative voices with some liberal ones. In a tweet, he wrote, quote, basically pleading to Rachel Maddow, Don Lemon, and others to put their shows on the platform. He said that those news anchors will receive Twitter's full support. The digital town square is for all. So this seems to be what Musk has been trying to do, especially with Twitter Spaces. In the span of 2 weeks, he hosted Republican presidential candidate Ron DeSantis, along with Democratic nominee Robert F. Kennedy Jr. And it really seems like he wants to create this digital town hall. I think personally it's a good idea, considering when he first took over Twitter, there was a lot of concern that there was chaos and that there would just be a lot of hate on the platform, especially from the advertising perspective. So perhaps this could change the
Full
narrative.
support sounds good. I would give full support with some money if I was Elon. Why don't you start paying these people to use the platform, to come on the platform, so then you promote Twitter more, and then you can actually grow the platform through that, right? And sell ads through that. But it reinvents the revenue model a little bit here, which they're clearly having problems with. They're clearly having problems selling ads. So if you can create content like a streaming service does, right? It seems like they're trying to push Twitter almost a little bit more as a streaming service. Well, if you want me to be on your platform and create content on your platform, pay me like a content creator. That's what TikTok does.
Well, I suppose, yes, but he's going to look for these names. Like, I mean, he's making a play for Lemon, and Lemon's certainly looking for something, although he said he's going to take the summer off. So it'll be the fall season that we're looking for something there. I mean, and, you know, he had already made this kind of reach out to Don Lemon, you recall, right after he left CNN. So it's not surprising that he's kind of coming back with that today, especially to balance out the conservative voices that you have there, and you have Tucker Carlson's show there now.
Yeah, he's trying to play both sides here. We'll see whether or not it is successful. In terms of this tweet, though, it is pinned at the top of his Twitter profile right now. So it shows that at least this initiative is a priority for now. We know that Musk does tend to change his mind pretty often, so we'll see how long he does stick with this. But to what you guys were saying, it's exactly right. Twitter, as it was before Musk had gotten there, this reliance on ad revenue is not working with him at the helm, off just about 60% on a year-over-year basis. We know that that was so critical in terms of the success of the company. So he is looking to other avenues in terms of diversifying that future revenue stream. I think he's still going to have the problem that Twitter has always had, and that's just the trust right now, just in terms of people going back to the platform, knowing that they can trust and rely on the news that is being shared. Yes, obviously, it would be super helpful if you have recognizable names that are out there giving that news. You know exactly where it is coming from. But I think beyond that, that's a big question for Twitter going
Especially
forward.
with AI too, right? There's images that are unverified, and then you have the Twitter verification system all over the place right now. But he does seem to have the support from the Twitter leadership board. There was a tweet from the new CEO, Linda Yaccarino. She wrote in her own Twitter thread earlier today, quote, "Have you ever been talking with someone particularly insightful and thought you should have the freedom to speak your mind? We all should enter Twitter 2.0. So this free speech push is really the big story here for Twitter.
And speaking of AI, that's a good segue. All right. A new study published today in the Journal of Applied Psychology found people working with AI are more lonely and can suffer from insomnia. And the remedy apparently is more AI. One of the things that stuck out to me was one of the ways they thought that they could remedy the situation was like giving AI a human-like voice. So I was just struck by that. Like, why is the solution more technology to this problem?
Honestly, this report just strikes me as someone who doesn't like their job, right? Insomnia and comes home after work and wants a drink. Like, you could apply that to a lot of different jobs out there, not just AI. And I can see, I mean, I go on social media sometimes. You fall in that rabbit hole of a couple hours go by, and after you snap out of it, you are a little depressed and you need to see other humans and see the sunshine. So I don't know if I buy this being totally pegged with AI.
No, it'd be the same answers if you just overused your laptop, probably, right? Or if you overused
technology
your phone.
across the board.
Right. The amount of things I read that say that I have insomnia because I'd use my phone right before you go to bed, right? I think that sort of is always kind of in line with that. So it wasn't too surprising to see.
Right.
But I mean,
it's not too surprising, but the fact that we are in this AI revolution, I think they're trying to call out some of the issues and potential dangers with being just too consumed within this space. So again, definitely not surprising, especially about the insomnia piece. And so this data matched up whether we were talking about, because they did the study in the US and in parts of Asia as well. So it matched up across the board.
Yeah, there was only 800 people surveyed in this. So I think it's kind of suggestive rather than conclusive of exactly what AI's impact is on workers out there. But I do think it brings up a good point, and that's a fact, and really what we've talked about so much when it comes to AI, and that's the need to use it responsibly. And there's so many questions out there just because we are in the early stages of this adoption, what exactly it's going to do to employees whose employer is using AI on a more regular basis. Obviously, that is happening across the board and really points to the employer's responsibility to help their employees navigate this uncertain time. There was another recent survey from the Boston Consulting Group, and in that they found that only 29%, so less than a third of workers out there say that their companies have enacted, quote, adequate measures to ensure the responsible use of AI, compared to nearly 70% of leaders who said the same. So certainly there is a shortcoming out there just in the part of the employer for what they have provided their employees. But I also think this is what a learning process is all about. When you have a new technology, it's going to take time to try and figure out all the risks out there and how to best protect yourself and others around you from AI and from those risks.
Maybe they'll set like similar limits, like the screen time limits that we give our kids.
We'll see, but I don't know if it's possible with AI. That's the thing.
It becomes a loop, I think, at some point, right? Where if you're using it a lot, then you need to use it more because you're reliant on it. I think there are plenty of things in life that work like that, right? But it starts to work like that, and then it, like those other things, it can be detrimental to you.
Yeah, certainly can. All right, well, let's end this on a lighter note, because this summer, it seems like it's all about those retro remakes. We have movies like Little Mermaid and Barbie, also McDonald's bringing back their mascot, the Grimace. It's making us ask if this summer is all about nostalgia. And guys, it certainly seems like that, even from the movie theaters to what McDonald's doing, to what's in style right now, Allie, when it comes to retail. 90s baggies pants, bell-bottom jeans are also making a comeback here. Even the sneakers that Josh rocks, and you don't have them on today.
My New Balances?
The New Balance ones. Those are something that all of our dads wore.
Okay, wait.
About 30 years ago.
You gotta ask me if you're gonna use me as a prop.
I know, I didn't think of it, so I was just talking right there.
I'm gonna hold my hand as responsible for part of this, kind of nostalgia kickback, because I feel like this is partly Gen X / older millennial, so the end of Gen X, I'm the end. Like, this is our generation, so the scrunchie, I was definitely,
I had
a scrunchie on my hand earlier, and I'm like, I gotta take it off.
Well, I brought it just to show that I'm carrying this scrunchie. I own several bell-bottom jeans. I actually just threw out a pair of white Skechers that I had for way too long because my mother was like, those are ugly, you need to get rid of them. But again, they were back in style. I think there are a few reasons why this is happening. I think a big thing is social media, right? TikTok, Instagram. You can make anything go viral. And if you have a couple older celebrities saying, hey, bring back Dunkaroos, that's an easy sell for the company. And then on the movie side, the fact that we have this strong IP, right? Transformers, Indiana Jones, Teenage Mutant Ninja Turtles, that's bankable content for these theaters. That already has an built-in audience. That's why you see a lot of prequels, a lot of sequels. So to me, this makes perfect sense why it's happening.
Barbie movie.
I looked into the movie thing.
Go ahead.
I looked into the movie thing a little bit because I was curious, because I feel like it's always about the past, right? That's all we're always doing, right? Retro is always popular, and it's always popular in Hollywood. So I went back a decade. If we look at the top box office movies in 2013, you'll see Iron Man 3, The Hunger Games, Despicable Me 2, Man of Steel, which is a Superman movie, and Monsters University, which is a Monsters, Inc. remake. So those are all series, all remakes. And then when you take a look at 2023 and what the top grossing movies are through this year, it's really kind of the same story, right? You have Super Mario Bros., which is obviously a callback, and then you have a lot of other series, and you have a lot of Disney series and a lot of cartoons. I think we're all always into old things.
Mm-hmm.
We're all always into whatever cartoon we grew up with.
Yeah.
It's just that age gets a little bit older, so then they get more money, so then they buy a little bit of merchandise and we put it in Hollywood.
And
That's
they're
my take on
making the
restaurant thing.
decisions. I think part of that is the decision makers in these boardrooms.
Well, it's easy to say yes to something when you know you can point back to that data years ago and say, look at how many people came, look at how many people are interested. You get the merch, you have the Star Wars content on Disney Plus, you have Baby Yoda selling out everywhere. So it makes sense. It's just this ecosystem that I think, nostalgia is always going to win out in the end.
It certainly has, and it doesn't seem like that trend is stopping anytime soon, given how much hype everyone is given to Barbie. The Little Mermaid,
I'm
but
looking forward
especially
to
Barbie this
the
summer.
real-life Paw Patrol movie in 10 years. It's going to be good.
Yeah.
15 maybe.
I mean, they already did a live-action Lion King, which was questionable.
Well, live-action Paw Patrol is coming in
Did
15
you all
There we
see
go.
how fast Josh tried to move us away from Barbie just now? He's like, he's not letting
We've
us
talked
see
about
it.
Barbie a lot. I won't be seeing
He's
it.
over it.
I don't know.
I think we all have to see
We all
it
have to see it
at this point. Group
Doing our
trip.
own
Exactly.
Yes. All right, Allie and Josh, thanks so much. We're gonna leave it there, but coming up next, pickleball is looking like the sport of the future, and now it's making its way indoors. We've got more on that when Yahoo Finance returns.
Federal prosecutors unsealing an indictment outlining 37 charges against former President Donald Trump for mishandling classified documents after leaving office and then blocking the government's attempts to try to recover those documents.
I'm more interested in the political ramifications of this. And it seems to me that any Republican who veers into thinking that this is a serious issue that compromises national security is not going to fare very well among other Republicans. And I think that's one of the more interesting aspects of this case. The politics of it are going to be just stupendous to watch.
Somewhat amazingly, this does not really hurt Trump among Republican voters. He retains a sizable lead in the polls, and in some ways, this seems to benefit him among his supporters. He may end up convicted of crimes by the time the election is actually held in November of 2024. How do we spin this forward for the market? This is probably a reasonably good outlook for markets. If it's Biden, markets are good. And if it's another Republican, Republicans generally are friendly toward markets and toward businesses. So I think that's pretty good too.
If the stock market is right, we've really still got a stock market rallying by the end of next year, and inflation has come down immediately to 2% by that point, and there isn't terrible unemployment. Whether he's indicted or not isn't going to make much difference.
Malls are getting a second serve. There is a new plan for struggling retail real estate, and it involves America's fastest growing sport, pickleball. A new company called Pickle Mall is looking to transform vacant retail spaces into indoor pickleball courts. Their mission is big: establish 50 locations across the U.S. in the next 2 years. The first location is opening next month in Arizona. Joining us now is Pickle Mall founder Steve Kuhn, as well as Pickle Mall's CEO West Shaw. Great to see both of you here, Steve and West. Steve, let me start with you because you've been betting big on pickleball now for quite some time. The sport, the growth of it has been exploding. Why does Pickle Mall make sense?
Well, the biggest problem we have, and continuing to the massive growth we've seen in pickleball, is we need more courts. The stats are there's one tennis court for every 30 tennis players. There's only one pickleball court, one dedicated pickleball court for every 250 pickleball players. We need a lot more courts. As anyone who's tried to play on a public court and waited for hours to play would tell you, we need more courts. And Pickle Mall is working to try and bring more courts and bring a great experience to more players.
So, Steve, I got to ask you about what demand looks like now. So we saw an increase over the past couple of years, but I worry that this is like just a trend because you see some sports trends, some athletic trends come and go. What are you seeing in terms of demand for 2023?
Demand is off the charts. We've gone from 5 million players 2 years ago to 35 million players in the last 2 years, and we have not been able to keep the pace of building courts up with that pace and growth of number of players. It's absolutely crazy how fast the sport is growing. And one thing I say about, some people say, is this only a fad? And I respond to them as, I don't know anybody who has got into pickleball who ever gets out of it. Once you're in, you love it. We don't lose people. So that's why I don't think this is a fad.
So Wes, the growth of Pickle Mall, obviously very ambitious, 50 locations you want to open over the next 2 years. Wes, how are you identifying those attractive areas where you're planning to put Pickle Mall courts here over the next several months?
Yeah, actually, so we use a lot of Google queries to figure out exactly where people are, where they're wanting to play. And the great thing about pickleball is that it's growing nationwide at an unprecedented rate. So, a lot of times it's just figuring out what makes sense in our growth strategy? Where do we want to grow to first?
So, Wes, let me follow that with a question just about noise. There's been a question about how noisy pickleball can be, say, compared to tennis. What are you going to do about, say, potential complaints that could come up?
Yeah, well, we're doing our best to mitigate those complaints by actually doing sound dampening, putting sound dampening devices in our facilities, trying to capture some of that noise. A lot of the times the doors are closed, and so the dampening devices that we have there will help mitigate a lot of that sound. The great thing is, being indoors, we don't have to deal with the neighbors hearing the noise. We just have to deal with our tenant.
That's a positive spin on Wes. I like that. Steve, talk to us just about the concept of pickleball, the sport obviously exploding in popularity. What is it about pickleball? I've been trying to figure this out now for quite some time. That makes it so popular. Is it the fact that almost anyone can play, it seems like?
Yeah, in terms of a tech startup, you talk about the total addressable market, the TAM. The total addressable market of this sport is higher than any other sport. More people can play it and enjoy it almost immediately than any other sport I've ever seen. Also, I think a big part of this is, and I hear this so often from pickleball players, is this is a sport that they can play with their kids. They can play with their parents. You can see sometimes 4 generations of a family playing together. And I think that makes it completely unique and special, and it's building family memories for people. I think that's a huge part of what makes it special.
So, Wes, I want to ask you, when I'm coming to, say, Pickle Mall, how do I, if I'm a newbie, I've never played this before, what do I do? Like, do I sign up in an app? What do I even do? I've picked up a tennis racket before, but not this.
Yeah, so in the next month, our app will be released on the Apple Store and Android Store as well, and you'll be able to go in there. You can sign up for your court reservation time. You can filter through a list of videos that we'll have on our app that'll explain, what's the first step into pickleball? How do you pick up the paddle? And then you can go in there, book your court time, show up, go play, have fun, and continue to play.
Where are you getting the best deals on some of these locations that you are seeing? And in terms of that future growth that you were talking about, yes, you're expanding here in the U.S. What about overseas?
Well, we definitely have a target of overseas. We're starting in the U.S. That's where the sport is biggest now. And I think for a shopping mall, what you really want to bring in to make your other tenants the happiest is an experiential concept, something that brings people to the mall that they have to they can't shop on Amazon for. They have to go to the mall to do. And Pickle Mall definitely is that. And I think that's what shopping malls want. That's what their tenants want. And they want us to deliver that and deliver those customers, especially delivering those customers Monday through Friday. That is a huge value add for these malls. So I think we're viewed as a great tenant, someone that makes the mall more successful, not just ourselves, but the rest of the tenants of the mall as well.
Steve, are you in talks with mall operators? How do these deals come about?
Yes, we are. Wes, maybe you want to talk that? You want to take that one? That's probably more in your camp than mine.
Yes. Yeah, we are in talks with mall operators. We've been working closely with Simon Property Group because they obviously own Arizona Mills Shopping Center, which is where our Tempe location is. And then we have got a list of brokers that are helping us gather other locations as well.
All right, well, Pickle Mall, Steve Kuhn and Wes Shaw, thanks so much for joining us here. You guys got to let us know when you open up a location right around New York. We got to go check it out soon.
We'll do that for sure. Working on it.
All right, thanks so much, guys. Coming up, the FTC is set to file an injunction to block Microsoft buying the gaming brand Activision Blizzard. But that's not stopping the tech giant from unveiling its new gaming strategy. We got more on that when we come back.
The Federal Trade Commission is set to file an injunction to block Microsoft buying the gaming brand Activision Blizzard. Despite the legal headwinds, Microsoft is plowing ahead with a newly expanded new gaming strategy that was launched this weekend at the company's Xbox Game Showcase. Yahoo Finance's Allie Garfinkel was there. Allie?
Hi, Diane. It was a first for me. I spent my Sunday with Xbox. The showcase I attended was in a theater in downtown LA, filled with laser lights, booming sound, and 2,400 very exciting gamers. My main takeaway? Microsoft is locking down its Xbox content. There were both a lot of new launches and a lot of launches that were exceedingly impressive. The star of the show was called Starfield Direct, a highly anticipated role-playing game built by Bethesda. Bethesda is the high-profile video game developer that Microsoft acquired 2 years ago for $7.5 billion. Now, if you're not a gamer and you're wondering why you should care about a game called Starfield, think about it this way. Starfield will be the biggest test to date as to whether that nearly $8 billion acquisition was worth it for Microsoft. Ultimately, first-party content like Starfield is essential to Microsoft's goal of building growth and eventually dominance in the gaming industry. Fundamentally, it's games like Starfield that will be driving the sales of consoles, PCs, and Xbox Game Pass subscriptions. This morning, Yahoo Finance spoke to Sarah Bond, Xbox's head of global gaming partnerships, about where growth is currently coming from in Microsoft's gaming business.
Game Pass is one of the things that players love about Xbox, and all of our first-party titles do launch into Game Pass, and our subscription business is actually now sitting at over $1 billion a quarter, and so we have just experienced tremendous growth there. That said, another reason why our first-party titles are so popular is we are committed to making them playable, as in many places as people want to play. We also have a very vibrant PC business. We actually also crossed over $1 billion on PC as well.
What Bond is saying here about Game Pass growth and the success of the company's PC business is encouraging. However, the FTC's plans to sue, possibly blocking that Activision Blizzard deal, mean that the overall outlook for Microsoft's gaming business remains uncertain.
Allie, I doubt that was your first weekend as a gamer with Xbox. I mean, the event, sure, but
it was my first time there in person. I'd never been
fine.
in a room full of that many gamers, but no, I've definitely been a gamer once or twice in my life, Diane.
Yeah, and definitely, I'm sure, on the weekend. All right, Allie Garfinkel, thank you so much. Meantime, mobility tech company ECARX is vying for its place in the growing automotive computing market. Our morning team caught up with the company's CFO, Ramesh Narasimhan, to discuss its latest quarterly earnings. Let's take a listen.
It's been a very, very strong performance in Q1. Revenue grew year over year at 16% in an environment where the production, specifically in China, year over year has been down 10%. Our profitability is very strong. Our gross margin grew 52%. Adjusted EBITDA was very, very strong. So we're pretty excited about the prospects and what we are seeing. There's a very strong demand as we are helping with the industry to transition to more electric vehicle future. And certainly we are pretty excited about the growth opportunities that we're seeing. And yes, we reiterated our profit and our revenue guidance for this year that we will get to 700 to 720 million, which represents about a 38% growth versus last year. So very exciting milestones for us to achieve.
And what's driving those projections? Because, a lot of people are wondering, should I be tightening my purse strings in a tough economic environment? What is giving you some optimism there in terms of this full-year guidance?
Well, I think the shift towards electric vehicle is happening quite rapidly. We're certainly leading in the leading market from an electric vehicle perspective. We're seeing very, very strong demand for our products. Certainly the importance of customer experience inside the vehicle is gaining a lot of importance, for which you need very strong technology providers. And we are pure play automotive, and that's a key differentiation with a lot of other players. We're pure play automotive. We are vertically integrated. What that means is we have end-to-end solution at a very, very cost competitive pricing, but also simpler and quicker to implement. So all of that gives us a lot of confidence with the growth that we have forecasted.
And some people might not be familiar with the company, but they're familiar with a lot of the brands who use your products and services, including Mercedes-Benz, Volvo, Lotus, Smart, and Polestar. Talk about the play there, because it's hardware and software as well, and what you really bring to the car experience, because I think of you guys as sort of the Internet of Things of cars.
Yeah, well, I mean, very simply, we're a mobility tech provider. But it's a lot more than that. We are, as I said, we are vertically integrated. We do software on chip. We do the operating systems. We do the software stack on top of it. So anything that enhances the digital customer experience inside the vehicle, we enable it. So what is really critical is the speed, the performance of the tech behind the scene, and that's what we are involved in.
And I want to ask you about the future of dashboard tech. I know a lot of us are already a little bit distracted there, but we are seeing a lot more development there. And you have a collaboration with Epic Games' Unreal Engine. Talk about what you're hoping to bring to the dashboard experience.
Yeah, I mean, certainly, as I said, the digital customer experience inside the vehicle is getting enhanced quite a lot. Earlier this year, we partnered with AMD and with Unreal Engine to showcase 3D graphics and gaming capability inside a vehicle. Of course, very important to note that the driver cannot use it while they're driving, but the requirements from a customer perspective is certainly increasing. And what this does, our partnership has enabled us to do is to have a real gaming experience like you would have at home inside the vehicle. So it is starting to get seamless integration into your vehicle and mobility.
And a lot of people are looking at what's next in terms of autonomous driving. I know Elon Musk told CNBC, he said we may see fully autonomous vehicles by the end of this year. Do you have a sort of timeline for that?
Yeah, I think autonomous vehicle is something beyond the scope that we are working on. We are a key enabler in terms of, as I said, the digital customer experience. But it is important to see that the industry is certainly focused on enhancing user experience, whether it is autonomous driving or whether it is the gaming I just mentioned. So I think there is a lot of engineering focus on enhancing the driving and the customer experience. So I think it will continue to evolve.
And I know you mentioned AMG. I did want to ask you about any concerns that you have about the chip race here, and especially when there's this sort of clamoring because of AI and everything else for certain kinds of chips. Are you seeing that affecting sort of the way you're able to do your work, or perhaps the sort of development for products and services that you have?
No, we have a number of partnerships that we work with. We have got our own SoC where we have developed a 7 nanometer chip with one of our JVs called SiEngine. We partner with AMD. We use other products as well. So we are very, very comfortable to have a partnership ecosystem. Our main objective is to deliver the best product, what the customer is looking for, and to enable that digital customer experience. So we don't see an issue in terms of these partnerships that we have. It actually enhances the capability and the products that we can offer.
A big thank you to ECARX's CFO Ramesh Narasimhan, as well as our Yahoo Finance morning team. Coming up, we check in on a few trending tickers that are moving after hours. Stay with us.
Curious about what's going on in the housing market and whether or not it's a good time to buy this home or another one? We've got you covered. We've got a jam-packed week filled with experts, including real estate agents from across the country. We'll also get a temperature check on the state of home building and whether or not it's a good time to stack up on those home builder stocks. We've heard from home builders that they're capitalizing on the housing shortage. We'll also tap into commercial real estate. Is it doom and gloom after all? And can't forget, we'll hear from the real estate queen herself, Barbara Corcoran. Tune into Yahoo Finance Live all week long.
Federal prosecutors unsealing an indictment outlining 37 charges against former President Donald Trump for mishandling classified documents after leaving office and then blocking the government's attempts to try to recover those documents.
I'm more interested in the political ramifications of this. And it seems to me that any Republican who veers into thinking that this is a serious issue that compromises national security is not going to fare very well among other Republicans. And I think that's one of the more interesting aspects of this case. The politics of it are going to be just stupendous to watch.
Somewhat amazingly, this does not really hurt Trump among Republican voters. He retains a sizable lead in the polls, and in some ways, this seems to benefit him among his supporters. He may end up convicted of crimes by the time the election is actually held in November of 2024. How do we spin this forward for the market? This is probably a reasonably good outlook for markets. If it's Biden, markets are good. And if it's another Republican, Republicans generally are friendly toward markets and toward businesses. So I think that's pretty good too.
If the stock market is right, we've really still got a stock market rallying by the end of next year, and inflation has come down immediately to 2% by that point, and there isn't terrible unemployment. Whether he's indicted or not isn't going to make much difference.
Let's take a look at some stocks that are trending after hours. We've got Oracle, Chegg, and Apple. Kicking off with Oracle, that stock up just about 3% here in extended trading. A very strong report here from the company, beating on both the top and bottom lines. Adjusted revenue up 17% on a year-over-year basis. The company really seeing some strength in its cloud divisions here. Cloud infrastructure revenue, that was up 76% from a year ago. Cloud application sales up 45%. We're seeing some of that excitement surrounding AI benefiting Oracle's cloud division here. You're looking at shares up just about 42% year to date. Flipping it over to Chegg, a bit of a different story there. That stock just barely in the red, off just about 0.3%. Some headlines here crossing after hours. A company saying that it's going to cut 4% of their workforce. They're doing this as they execute on their AI strategy. Now, in a statement, CEO Jan Rosenzweig wrote that by the end of the year, we will have hundreds of people working directly with Cheggmate, which is the company's automated tutor interface. Now, remember, when we take a look, let's throw up a 3-month chart here because I think that best illustrates the drop that we saw back in the beginning of May when the stock lost nearly half of its value, and that came after its most recent earnings report when Rosenzweig said that ChatGPT does really pose a threat here to the company's business. So Chegg really pivoting, trying to capitalize on this momentum in AI, using AI to better position its company against some of the competitors out there. Over the last 3 months, though, we're still looking at losses of just about 31%. And wrapping up with Apple, this stock hitting a new record high this afternoon, closing at 183.79. That was at the highs of the session. Now the move higher coming just about a week after unveiling its Vision Pro headset. And put this all into context for you when you take a look at this longer chart here within the trading action that we have seen. We haven't seen a move like this or a new record high for the company since back in January of 2022. But again, closing at a record high, 183.79. We'll see whether or not that continues. Year to date, Apple, one of the leaders here among the big tech giants, up just about 41%.
It is closing time here at Yahoo Finance. Here's a look at some of the top stories of the day. Carnival was the top trending ticker all day, thanks to an upgrade. Bank of America raising the stock to buy from neutral, saying demand is trending higher, even surpassing pre-pandemic levels. Analysts saying the cruise recovery is stable and would be less susceptible to a consumer slowdown.
Investors are now looking ahead to the latest reading on inflation. The May Consumer Price Index is out tomorrow ahead of the open. The expectation is for inflation to rise 4.1% from a year ago, which would be slower than what we saw in April. Excluding food and energy prices, core inflation is expected to jump 5.2% from last year. And of course, this comes ahead of the Fed decision on Wednesday, where markets are expecting the central bank to pause rate hikes.
Also on tap tomorrow, former President Donald Trump's court appearance. He's set to be arraigned Tuesday afternoon in Miami. Trump faces 37 counts of mishandling classified records at his Mar-a-Lago estate and trying to block the government from recovering them. After the appearance, he's slated to fly back to New Jersey and is scheduled to speak at 8:15 p.m. Eastern from his Bedminster Golf Club.
All right, well, that does it for today on Yahoo Finance Live. Thanks so much for tuning in. We'll see you right back here again tomorrow afternoon. Have a good night.